أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وبارك وسلم. Assalamu alaikum dear students, and welcome to another session of the video lecture series for the subject Financial Statements Analysis. This is video lecture number 7, and inshallah in today's lecture we'll discuss common size analysis and index analysis. This is basically the second lecture from chapter number 4, but it's the 7th lecture of our video series. So let's talk about what common size analysis is and what index analysis is. Remember that in our previous lecture we had discussion on two of the other financial statements analysis methods, which was horizontal analysis and vertical analysis. We had enough discussion on that, and now we'll start with the common size first. So what is common size analysis? It is the analysis of percentage financial statements where all balance sheet items are divided by total assets and all income statement items are divided by the net sales or revenues. The statements where we use common size analysis are called common size statements. So what is common size statement? It's a financial statement that shows only percentage values and no absolute dollar amounts. So it's the method of the common size analysis is like the vertical analysis, but when we did vertical analysis, we used to use the comparative income statement or comparative balance sheet, and then we figured out find the percentage change or the percentage of the numbers. Means we used to find out what is the contribution of each item in the total of another item in the financial statement. For example, in the balance sheet we found out what percent contribution of each line item is in total assets, and similarly in profit and loss statement by using common vertical analysis we found out that what is the percentage of each expense or each item of the profit and loss statement, what is the contribution of each item in the total sales. So that's what we did using vertical analysis. We'll also use the same formula that we used for vertical analysis, and we'll prepare a common size balance sheet. So let me show you what common size balance sheet looks like. This is a common size balance sheet. You can see these are the regular thousands. You can see 148,000, 100,000, 90,000, 283,000, 410,000, 390,000. So there are 3 years taken here: 2015, 16, and 17. And this is the balance sheet, and we see here the asset portion: cash, account receivable, inventory, other current assets. Then we have here total current assets, the net financial assets here. Then we have long-term inventory and other long-term assets. So then we have total assets. So these are the numbers from here to here, all of the numbers. Now 3 columns here, you can see this is the common size analysis columns. Now what has happened is for 2015 5, what has been done, basically the subtotal is divided by the grand total and then multiplied by 100. You can see this is the subtotal, 148 divided by 1223 multiplied by 100. If you do that, you will get 12.2%, right? So here the subtotal divided by the grand total multiplied by 100, you will get the result. So same operation has been carried out for all the other numbers as well, and at the end you can see all of them here. Now for this one, you can see that here, what is the subtotal? 100 divided by 100 multiplied by 100, you will get 100%, right? Now the next one is the other portion, liability and equity portion. Same operation has been carried out for this as well. Look at this one, 295,000 divided by 2,044 multiplied by 100 to get this answer. Then 94,000 divided by 2,044 multiplied by 100, you get 4.6%. And same operation for all the others. Then there is a common size income statement. Here what has been done, each item is divided by the sales, because here the sales is the grand total. So for example, let's take 2017 here. In 2017, look at this one. These three are the number columns and these three are the common size columns. So now here, what is the subtotal? Subtotal is, for example, cost of goods sold, 1599 divided by 2211 multiplied by 100, you will get 71.3%, right? Similarly, 612 divided by 221 multiplied by 100, you will get 28.7%. Similarly, 402 divided by 221 multiplied by 100, you will get 18.2%. 18.2%. Now what does it mean here? It means that cost of goods sold in 2017, cost of goods sold is 72.3% of total sales. Similarly, in 2017, gross profit is 27.7% of total sales. Similarly, administrative expenses are 18.2% of the total sales. Similarly, EBIT means earnings before interest and tax, is 9.5% of the total sales. Similarly, interest expense is 2.7% of the total sales. Earning before tax, EBIT, earning after tax, EAT, EBIT and EAT, right? So then we have cash dividend. Cash dividend, for example, 2.3% is of total sales. So this is how we interpret the results. Now let me show you how it is done in Excel, and how can we do it while we prepare a common size analysis. Okay, here is a common size balance sheet of an XYZ company. This is the asset portion from here to here, and this is the liability and capital portion from here to here, and you can see that total assets equal to total liabilities, right? All right. So this common size balance sheet contains the information for 2015 and 2016, and you can add for 2017 as well. So let's do first for 2015. 2015 operation has already been done. You can see what has happened. What is the formula for the first? You can see is the subtotal divided by grand total, cash divided by total assets multiplied by 100, and you get what? 9.7%. It means that 9.7% is cash in total asset. In total asset, 9.7% is cash. Similarly, for account receivable, 18.55% of total asset is account receivable. And the same operation, subtotal divided by grand total multiplied by 100. And now let's do it for 2016. So this is our subtotal divided by grand total, then multiplied by 100. What's the result? 14.7%. Let's reduce it to two decimals, 14.7%. Similarly, we can drag and drop. Okay, subtotal divided by grand total and multiplied by 100, right? Subtotal divided by grand total and multiplied by 100, you get 24.5%. Next, subtotal divided by grand total and multiplied by 100. That's 35.6%. So we can say that 35.6% of total assets is inventory. Then we have total other current assets, subtotal divided by the grand total and multiplied by 100. You get 12.6%. 12.6% of total assets is made up of other current liabilities. Okay, you can also do it here. Subtotal divided by grand total multiplied by 100. So that's the 100%. Okay, now you guys are required to upload data here, but remember that total assets must always be equal to total liability and equity. So all the numbers that you put here, the total of all these numbers should be equal to the total of liability and equity. So it means that you have to adjust liability and capital to the total, which equals to total assets, right? As here we have done here as well. All right. Okay, let's do it for here. Total divided by grand total multiplied by 100. Subtotal divided by grand total and multiplied by 100. 100%, right? So total liability, all right. Here what I did not use the formula for total liability because total liability itself is a total. So I did what? I found out the total percentages of the liability items, liability accounts. Then I found the percentage of the owner equity. Then I added both the total percent of the liability and total percent of the equity, which is equal to 100. If all these percentages are added and they equal to 100, it shows that your computation is correct. If it is not equal to 100, it will mean that your computation is not correct. There is something wrong with your computation. So we have to be careful with that, right? Similarly, if you add the owner's equity percentage and the total liability percentage and it equals to 100, it means your operations is correct. If these two does not equal to 100, it means your operation is not correct. Now you guys are required to input data values here, here and here, then calculate the common size percentage for 2017 using the same formula that I have used here, and then interpret your results there and let us know that what percent of each asset items or of total assets, right? So this is how common size balance sheet is prepared. Now let's go and talk about the index. Index is same as horizontal analysis, but this is something different. An analysis of percentage of financial statements where all balance sheet or income statement figures for base year equals 100% and subsequent financial statement items are expressed as percentages of their values in the base year. Index statements. What is index statement? Index statement expresses the comparison in percentage as well as in absolute numbers, like horizontal analysis. If you want to prepare a common size analysis, you have to use vertical analysis formula. If you want to prepare an index financial statement, you will have to use the formula of horizontal analysis. Let's see an example in the slide. Okay, so as said that the base year percentages should be equal to 100. That's the rule for index financial statements, that the base year percentages are taken as 100%, right? So for example, this is 2015, this is 2017, 2007. These are regular thousand numbers. Up there is a regular thousand numbers, thousands of dollars, right? For example, $148,000, $100,000, $9,000, right? It's the same example that we use for common size analysis. Now the same balance sheet is used to prepare an index balance sheet. You can see these are the numbers taken from the balance sheets of this company of 2015, 16 and 17, and they are put together in order to prepare an index balance sheet. Now this is the index balance sheet, 3 columns added here. The first column is for the base year, and base year here is 2015. Now 2015, all the values are taken as 100%. Now what we will do here, we'll do same as common size, same as horizontal analysis. What was the formula for horizontal analysis? It was current year, which is 2016, minus base year, right? Then divided by base year multiplied by 100 plus base year 100%, right? So the same operation is carried out here, and for the liability and equity portion Same for 2017. Current year minus base year divided by base year multiplied by 100 plus base year 100, right, for each item, right? The same operation is carried out here. Now let me show you how it is prepared in Excel or in any other format. This is a common index. This is an index balance sheet for XYZ company. We are carrying out index analysis. This is for 2015, 2016. You can do it for 2017 as well. So here, as per the rules, these are regular numbers and these are index percentages. Right? 2015, 2016 and 2017. As per the rules, the base year is taken 100%. You can see it's 100%. Base year is 100%, all the items. Now what we will do, we'll find out the percentages for the rest of the years. We can see here, look at the formula. You can see current year 2016 figure for cash of 2016 divided by the cash of 2015, which is the base year, right? So current year cash figure minus base year cash figure divided by base year cash figure multiplied by 100 and plus base year index, right? Let me do it here step by step. So I show you how 136.75% is obtained. The formula is current year minus base year. That's the dollar change. Now we want to find out percentage change. So what I'll do, dollar change divided by the base year. This is the percentage, right? Now what we'll do, percentage plus index of the base year Alright, so as discussed, what is the formula for horizontal analysis? In horizontal analysis, first we find out dollar change, then we find out percentage change, and there is an additional step of finding out indexed percentage. So how dollar amount is found out, dollar change is found out. For example, if we are doing it for cash, right? So you can see current year 2016 minus base year, which is 2015, we get a dollar change. This is dollar, right? $86 increase has occurred. Now what is this $86 in percentage as compared to 2015? If I would like to say what percent has increased as compared to 2015, how much cash has increased in 2016 in percentage. So I'll do that by dividing the dollar value on the base year figure and multiplying it with 100. I'll get the percentage change, which is 58.11%. Now how will I do it? Well, I show it in as an indexed percent. I'll add this percentage to the base year percentage, so I get an index percentage, which is 158.11%. So this operation has been used in a single formula for each item. Here you can see current year minus base year divided by base year multiplied by 100 and then plus base year percentage. So this E37 is the current year figure, D37 is the base year figure divided by D37 again base year figure multiplied by 100 of the formula plus G37 is the base year index percentage, right? By doing this we can get all the percentages of. So 158.11 is the indexed percentage of 2016 for cash, and 137 is for account receivable, 175 is for inventory, 200 is for 2000 is for other current assets, and okay, there is a dramatic increase. Other current assets were 10 and here there were 200. Now that's why there is a 2000 percentage. There is a huge increase in the other current assets. Now other fixed assets 25% indexed percentage, and total assets 103.66 index percent. Same is the case here with the liability and capital portion. Same formula has been used. You can see same formula, and these are all the indexed percentages for different items of the balance sheet, right? Okay, hope you understood. All right, so this is how a indexed balance sheet is prepared. Similarly, we can prepare an indexed income statement, and we can also prepare a common size income statement using the same formula as we have used here. But remember that for when you prepare a common size income statement, remember that the grand total is up there, total sales, right? Similarly, when you prepare a indexed balance sheet, so the same formula is used. Current year divided by base year multiplied by current year minus base year divided by base year multiplied by 100 plus index 100. That's the formula used in order to prepare a indexed income statement. You guys are required to populate for 2017 and then also prepare a same analysis using the income statement and do a common size analysis and as well as an index analysis, and get back to me if you have any questions, right? Okay, let's close it. I can share these files with you if you want. Please let me know and share your email addresses with me so I can share all these templates with you. Now we have another analysis by the name of trend analysis. Remember that there is no a rule or a formula for making a trend analysis. As you can see the name trend, this analysis is basically the graphical representation of all the other four type of methods that we studied. For example, if you want to graphically show the common size analysis, index analysis, or horizontal analysis, or vertical analysis, you can use a trend analysis in order to graphically present those other analysis or other financial statements methods. It finds out direction of the results in all techniques discussed above. It is used while performing the other techniques. Means you can use trend analysis aside by horizontal analysis, aside by vertical analysis, and aside by common size, aside by index. You can, for example, on one page you can do a horizontal analysis, on the other page you show those results of the horizontal analysis in geographical representation by using the trend analysis, right? It just show the graphs. We just see that results is positive or negative. If it is going upward, it's positive. If it is going downward, it's negative. Whether the result is weak or strong, right? So here, for example, some figures are given. There's a company, it's their short income statement, total revenue and total expenses, then net income. And similarly, for example, you can see here they have used a horizontal analysis, right? Current year minus base year. 95 is base year, so current year minus base year, it's the dollar change. 171 is the dollar change, right? And then percentage change divided by the base year. Divided by the base year, when you divide, it's 9%, right? So, and plus 100%, 100 index percent, it becomes 109%. So let's see how it has been graphically shown. You can see it's 95, 96, 97, 98 and 99. This color shows sales, while this color shows the expenses. So there's a relationship between these expenses. This shows how strong this relationship is, whether there is a relationship between expenses or not. You can see in 1995, both expenses and the revenues are equal, because they are indexed to 100%, right? Here we can see expenses 100 and revenues 100, expenses 100. That's why there both of them are on the 100. Then there's 110, 120, 130, 140. These are the percentage of the base. Now in 1996, if you can see, the revenues are 109, expenses are 106. So this has been shown here graphically. These are the graphs. You can see 106, 109, then similarly 110, 116, 116 and 123, 120 and 131, right? Now all the points of the expenses has been joined with a line. The line is going upward, means each year the expenses are increasing. Similarly, each year the sales are also increasing, and their trend is like same, right? So there is a strong relationship between the sales and expenses. As long as the sales increase with the same pace, our expenses also increase, right? So basically the trend analysis is used for graphical representation. In order to present different analysis in a graphical way, we use the trend analysis. We can use trend analysis aside by horizontal analysis. We can use the trend analysis aside by vertical analysis, and also aside by horizontal analysis, aside by common size, aside by index. For example, here the trend analysis was used to interpret the results of the indexed analysis, right? So that's all for today. Thank you so much for being with me. If you have any questions with regards to any of the above mentioned or discussed financial statement analysis methods, please do let me know. I'll be more than happy to get back to you and to help you understand horizontal analysis, vertical analysis, common size analysis, index analysis, and the trend analysis. Thank you so much once again for being with me. God bless all of us, and bye for now, and inshallah see you next time. Wassalamu alaikum wa rahmatullahi wa barakatuh.